Finance Minister Mutuli Ncube expects the economy to grow just 2% this year, slower than the 3.5% he had projected in the 2024 budget. Professor Ncube revealed this today when he presented the midterm budget review in Parliament. We'll get more in the following report.
Zimbabwe, like the rest of the region, is only coming to terms with the full impact of the El Niño-induced drought. Sadly, the minister confirmed that the damage is more severe than initially predicted. Agriculture, the economy's backbone, will shrink by at least 20% this year, while mining will grow by 5%, as weighed down by weak commodity prices.
The domestic economy is now projected to grow at 2% in 2024. This is down from the 2024 national budget projection of 3.5%. And this is shown on slide 5 on the screen, where we have reflected every sector of the economy. You can see there that we expect natural negative growth from the agricultural sector at minus 21.2%. But I'm hearing optimistic numbers from Minister of Agriculture again, which is very pleasing, on the back of better performance from the wheat crop.
Through these difficult times, a growing ICT sector and resurgent tourism industry will anchor the economy and growth of just 2%. To support the new currency, Treasury proposes payment of customs duty in local currency on selected products. For corporates whose revenue exceeds 50% in Forex, income tax will be on a 50-50 basis. And if a company's revenue is over 50% in ZiG, tax will be payable proportionately in the currency of trade.
And going forward, I propose to amend legislation and compel any corporate whose revenue exceeds 50% in foreign currency to account for corporate income tax on a 50-50 basis. Furthermore, where a company's revenue exceeds 50% in local currency, in ZiG, tax shall be paid proportionately in the currency of trade thereof. I propose payment of all presumptive taxes in local currency, regardless of currency of trade. Furthermore, in order to promote usage of local currency, I also propose payment of customs duty in local currency on selected products.
Between January and June 2024, Zimbabwe's forex earnings were $6.2 billion, 9.5% up from $5.6 billion in the first half of 2023, largely driven by export growth and remittances. Authorities expect the current account to narrow to $44.5 million in 2024 versus a surplus of $133.9 million in 2023. In the 6 months to June, government collected 36.5 billion ZiG and spent an estimated 38.4 billion ZiG. This means expenditure was 44.2% of the total approved budget. Government collected 36.5 billion ZiG in revenue against expenditure estimates of 38.9 billion ZiG during the first 6 months, resulting in the 2.3 billion ZiG deficit. This was attributed to the lower than expected revenue, to a challenging economic environment, increased debt servicing costs, the currency transition, and drought response measures. Despite this, the Treasury Chief assured the nation that the full-year budget is sufficient to cover government operations in the absence of other significant shocks.
We now cross over to Andy Hodges to discuss some of the pertinent issues regarding the mid-year budget review. Andy, good evening. Economic growth projection has been revised down to 2%. Now, apart from the effects of the drought, what have been the other factors at play?
I think, first of all, it's important to note that the reduction in the growth rate of Zimbabwe is not just to Zimbabwe alone. In fact, it's a global phenomenon. As you recall, the minister said that the growth rate initially had been projected at 3.5% and is now at 2%. But even that 2% is actually a bit better than most of our peers in the region, in Southern Africa and, in fact, in Africa. Now, of course, the major reason for the reduction in growth rate is El Niño, the drought. There's no doubt about it. So when you ask what other issues issues, what other factors contributed to the reduction in 2%. In fact, it's really directly linked to the drought. So, for example, because of the drought, we've had a reduction in agricultural supply. Because of the drought, we've also had a reduction in disposable income, which means that citizens do not have as much money as they had before to be able to purchase things, which obviously means that manufacturing output is down, manufacturers not making as much products as they can, and that is one of the major reasons, again, for why the growth rate is down. Now, one of the other issues, of course, is also the weakness or the weakness of the PGM platinum group of metal prices on world markets. As much as they are making huge export proceeds for Zimbabwe, that reduction in price has obviously seen export receipts coming down, coupled as well, of course, again, with remittances. Remittances may be a bit softer this year because other people around the world, or Zimbabweans sending money around the world, also are facing economic issues wherever they live. Look at the UK, for example. The cost of living is sky high. America the same. Europe the same. South Africa the same. So as a result, you're finding that it's a ripple effect mainly caused by the drought. And that, because we're an agri-based economy, obviously has an impact across all sectors of our nation.
Now, Andy, as a follow-up to that, the minister had already projected that agriculture would contract by 4.9%. But now there has been a review and there are indications that there is actually a 21% decline. Question is, how much will this derail the plans of the government?
Now, the minister already knew that agriculture would contract. His estimate last year, when he presented the budget, was 4.9%. The numbers, of course, are 21%. Now, the minister, of course, couldn't have known that. He couldn't have known the impact of the El Nino drought. At that point, we thought we may possibly have a decent rainy season, but in fact, we didn't. So as a result, that has had a huge impact on the economy. Why? Well, simply put, Zimbabwe is agri-based. Most of our products, 70% of our agricultural products, actually are used to make something else. For example, you look at soya, that could be used to make paints. We look at other commodities, they can be used for commodities that we use on a daily basis, such as soaps and detergent and so forth. So as a result, of course, that reduction in the agricultural sector by 21%, okay, has a direct impact, of course, on the economy and also on the government's plans, because they were budgeting, they were depending on the agriculture being at least firm. 4.9% is acceptable. 21% is a huge knock on agricultural production, again caused by the drought. And I think that is important to note based on how our economy is structured.
Lastly, Andy, despite softening of some of the commodity prices, such as the PGMs, other minerals such as lithium and gold continue to somehow positively impact the economy. Question is this: how should the government take advantage of this?
Now, as much as I was talking about PGM metals being softer on world markets, of course, they are still bringing in huge receipts. But you've seen it happening in the companies that produce these minerals. They've already started retrenching, laying off workers because of that soft price. Of course, we're still exporting, we're still making money, but not as much as we anticipated due to the softening of the global commodity prices. But of course, gold is going up. So when you look at the commodities, you can't really put them all in one basket. Gold is firm. In fact, gold is reaching new highs never reached before, which is great for us because, of course, we use the gold to back the ZiG. So it's really critical, of course, for us. So it's good for us that gold remains firm. So as a result, it gives us much more cover, reserve cover for our currency. But before I leave, there is one issue I want to talk about, and it's very important. There's no doubt that the review, the midterm budget review 2024 by the Minister of Finance, Professor Ntuli Ncube, was definitely citizen-centered. There's no doubt he tried to put money in citizens' pockets. For example, the presumptive tax. He tried to put issues such as reducing withholding tax on some products, VAT reduced, particularly on things like poultry, live cattle, things that really matter to citizens, where they are making more money. The bottom line is this: the minister's strategies, the minister's policies, the government's policies have, in this review, put more money in citizens' pockets, and that is good not only for citizens, but also for the economy.
Konapo, ipapo pa ZTN Prime, DSTV channel 294, the place to be.